Good evening, everyone. My name is Paul Young. I'm just going to walk you through some latest data in terms of the market outlook. So basically, I've just put this disclaimer through just to let people know that this is just one perspective and one opinion on the stats. It's up to the individuals to do further research, whether you want to read out to the Globe and Mail or other sources for additional information to kind of get a clearer difference of opinion on the market. So that's basically why I've set that disclaimer up. Now, on my agenda is I'm going to look at income growth. I'm going to look at housing prices, housing starts in U.S. and Canada, exports analysis. I'll get into government finances as well. So let's talk about wage growth. This is a good chart to show because people want to kind of look at government errors. And each period, if you look in the 80s, this is when Ronald Reagan came into power, and this is where the U.S. in terms of its wage and income growth grew the most. Now look at what you're seeing since the 1980s. You're seeing a drop down in terms of growth in wages, in terms of the inflation. And even when you go down even further, when Obama took office, you're actually seeing even a decrease in terms of where income growth is. So it's actually got worse under Obama, and that's not something Obama seems to talk about. And this is basically a good indication of where the U.S. is headed right now, and it's something that you need to watch out as you watch the U.S. election unfold with the Democrats and the Republicans. The second thing I wanted to show you on the far right hand side is Canada's the second best country overall to live in. So that's a good indication that government policies that Stephen Harper's brought in over the years have actually helped Canada quite well in terms of its overall performance. The other thing I want to show you here is down the bottom right hand total. This is from a video that CNN did, and it actually shows you income growth. Now if you use 30 years, that we're actually only growing less than inflation, but you got to factor in some recessions in there, so we probably are growing about 1.5 to 2%. But basically what you're not seeing there is, look at the US. They virtually have done nothing. Their income is actually stagnant and got worse since 1981. Now, there's a good indication, let me back up there for a second. One of the things Canada does, and some of the other European countries do, is they do a better job of redistribution of that wealth. What that means is that that bucket of tax dollars that's collected gets reallocated in education and healthcare. Canada, Sweden, and Norway do a much better job of redistribution of that wealth. The US, the top 1%, tend to do a lot better than the other 99%, and that's the big issue at hand. Canadian housing prices, if you look at this, most of this is driven out west, and a lot of this has to do with basically the growth areas when the boom cycle in the oil and gas sector and the commodities out in Regina, Saskatchewan, Alberta. That's why you're seeing a growth. Winnipeg seems to have gone through a bit of a growth spurt as well, along with Quebec City. Quebec City has seemed to diversify a bit. It's more of a technology belt, biotech, so that's why you're seeing that. And you get down to the lower ends where you're seeing the former blue-collar towns like Thunder Bay, London, Sudbury, St. John's, Windsor, that were known to be blue-collar towns. That's why you're seeing a struggle there. Housing starts. Canada's done well. We've come down from the peaks and valleys of 2005, but we're still done decently in our housing starts. This is the one graph I want to show you quickly. Is we peaked in over the 90s and the early 2000s with the way the mortgage rules were working in the U.S., well, you're seeing a big drop down. That's when the market fell out during the recession, and it's slowly coming back up. We're still not to 1.5 million housing starts, because I think that's the index that they're using on the average, and they still haven't come there. But it's rebounded quite strong in the U.S., and that's actually going to drive forestry exports. Now on the export side, I want you to look at two things here: volume and price differential. Now basically, we've done decently in most of the categories in terms of volume year-to-date change. Look at the pricing difference. Well, commodity areas basically have seen a huge drop in prices, and that's impacting what you're seeing in the red there. That's showing you a good indication. But look at some of the healthy sectors. Metals, aerospace, you're seeing vehicles, food. Those are key areas because they drive good performance on exports. I want to show you real GDP growth. This is why I brought this in, because 8% of the exports roughly are Europe. And if you're seeing sluggish growth in Europe, then you're going to see sluggish impact on exports going to Europe. Fiscal imbalance. What I wanted to highlight here is where countries like France, Spain, France, Italy, and UK have struggled with budget deficits. Canada actually has as well, but they ran a surplus, which is something that the Liberal government, Justin Trudeau, has denied and won't talk about as part of any discussions. And that's something you need to bear in mind here. That's why I'm showing you this here. The overall government debt, now these are mature economies, so in a lot of cases you're going to see higher ratios of this because of the demographic shift. What I want you to show you here is Canada is relatively in good shape in terms of its debt to GDP. It's actually around 30%. This is at a federal level, so we've done pretty good considering our peers. Now, this is what's interesting is Justin Trudeau says he wants to see the economies across the world spend more money. Well, it's easy to spend money, but what you have to do is be prudent how you spend money. You can't grow the size of government faster than you grow your GDP. If you're going to make spending, it has to be significantly in areas that will either boost GDP, and that's in terms of infrastructure support, or help control the cost containment in areas of departmental spending. That's not something Justin Trudeau is talking about, because he's even pulling back in areas where he did the sick leave. He's actually giving that all back to him. So he's adding more cost to government. He's not looking at the most efficient, effective use of government tax dollars. And that's something to bear in mind as you move forward. Thank you.